Welcome to the smartfinancein.com. So I am going to describe the intraday trade using the volatility. So first time we will be using the volatility in the intraday trade. This is an innovative technique of smart finance. So this method maintains great accuracy and it also has a great authentic procedure to do intraday trade in any of the segment, either in commodity or currency or in the stock. So in this presentation, I'll be finding out the volatility. This is daily volatility, and I'll be calculating the expected price range according to volatility, and the trend identification I have to do, and trade entry and profit booking, and I will backtest this method with the past data to show its efficiency. And the steps whatever I am going to take here, I'll be calculating the daily volatility from the past 10 days data. I'll be calculating the expected price range from the daily volatility. I'll identify the trend based on the Fibonacci principle or Gann or Elliott, and in this presentation I'll be using the Fibonacci principle, trade entry and exit process I'll be describing. So this is what we are going to learn today. So I have just taken one Excel sheet here. I have taken the NSE Nifty data. So I'll be taking the last traded prices of the NSE to backtest this method. So what I have done here, I have taken the past 10 trading days data, last traded price. So 28th May to 10th June. So I am recording this event on 11th June. 11th June, time is 2:38. So in the live market also we can see its performance. So here what I have done, past 10 days data I have taken. I am calculating the daily volatility. This is the daily volatility. How I will be calculating? So I will be taking here the LN parameter. So LN parameter. So here this is the first two records will be 0. So I'll just initially I will just delete it so that we can do it freshly. So I have just taken the LN parameter. So by mean of which current price divided by the previous price. This is the what I will be doing. Then after I will be taking the square of this one. So all these things I am doing to calculate the 10 days volatility from daily volatility from the past 10 days data. So this is what I have ln and ln square I have taken. Then I will be taking the average function which is available in the Excel sheet. So I'll be taking the ln average, and also I'll be taking the ln square average. So ln square average of all these ln squares. So after these things I need to find out the variance. So variance is ln square average minus ln average whole square. So whatever the value find out in the C column, that average whole square, and it should be deducted from the whatever the average you have found out in the D column. So by this process we are finding out the variance, and I will be taking the square root of variance and multiplying it with 100 to get the daily volatility. What it says, in the day following, which is on the 11th June, my Nifty will show 0.6726% of volatility. So in price term, if I can multiply this daily volatility with the price which has occurred on the 10th June, then I will be getting what is the expected price range. So I will be just multiplying this one with the daily volatility. This says that we are expecting, and entire result I need to divide it by 100. So that this says that in the day following, which is in the 11th June, I am expected to move by 40 points. Then I will be using the Fibonacci proportion. So here is the Fibonacci proportion 0.382 times of this price range. This says that this is for my trend identification. If I will take a calculation from 5906, it says that above 5921 my trend is up, and below 5890 my trend is down. So this is what I have done just by multiplying the Fibonacci ratio with the expected price range whatever I have calculated based on the volatility from the price point of 5906. Now it is saying that on the 11th June my trend will be 5921 above, trend will be up, and it will go take me to 5945. If it is fallen below 5890, it can bring me down to 5866. However, I have opened at 5868. So this is that I have neither in this any of this range I have not opened up. I have opened up way beyond my target. So I'll just change the last record to 5868 and see what has happened. So it is just saying that 5882 above my trend is up, 5853 below my trend is down, and it has the power to take me to 5830. So I have opened at 5868. So if you can see in the chart, today till this point I have gone till 5795. So this is the Nifty. So I have opened and made a high of 5877. So my buy trade has not triggered. Rather I have gone to 5795. So if you can see today's trade, 11th June I have expected till 5830, which I have achieved 100% without triggering the stop losses. So let us backtest this for other dates. So I have backtested with for till taking 7th June, backtesting for 10th June. So it has given me a trend signal 5911 above my uptrend, 5878 below my downtrend. Uptrend has the power to take me to 5839. And in fact, if you can see, I have just opened at 5920, couple of points above the buy signal, below my first target, and I suggest that I have just touched the expected things, and low suggested that 58767. So after then trend has changed and I have achieved one level of target in the downside also. So this says also uptrend we have achieved 100% of success, expected success, downtrend one level of target. So similarly, so this date of till 6th June, if we have taken, and 7th June we are investigating, we will be getting the uptrend at 5954, downtrend at 5912. We have opened at 5933. So neither in the uptrend nor in the downtrend, and the day's high suggests that 5989. So we have touched the optimum target here. So day's low suggests that 5883. Sometime during the day also we have swing. So in the both the sides we have achieved almost 100% target. So this method, so 3 days, 4th day also you can say. So here my open is 5900. So I need to change the last record to 5900 to get the value for the day, because I have expected something. It has, the gap down opening has happened. So this is that I can buy at 5921 for a target of 5955, or I can sell at 5878. So it says that open happened at 5900 and this low 5878. I just come to this triggering level, and from there I have bounced back, and my day's high suggests that almost everything I have achieved on the 6th June. So out of 4 days analysis, I am just concluding that most of the days without triggering the stop losses, I have achieved overall success of all 100% levels on the Fibonacci proportion. So this is the power of this method, and using this same concept, if we are distinguishing the instruments based on their volatility and all, then we can do fantastic trades. So best using the same concept, we have developed a automated software, so which can give you the enhanced results, like if we are going for index future. So just we have to select index future, select and click of button. It will give us all these levels. It will, same concept is being used. However, the concept is being programmed here with an enhanced accuracy. So you can just click the index, click the expiry, click here, so you will get the real-time volatility based on that, you can trade also. You can take the currencies also here. Currencies also you can trade here. So just you have to select it and you have to just hit a button, so it can give you. So future, index, equity, currencies, everything you can trade in this. So this is what the volatility technique is.